Well, good morning. I hope you can all hear me okay. This is Claer Barrett. I'm the personal finance editor at the FT. This is a bit of a brave new world for us this morning. I'm coming at you from my living room in Hackney in central London to deliver the first of what we hope will be a useful series for FT readers called Claer Barrett's Business Clinic. Now, the reason that I, as the personal finance editor, am doing this because lots of readers of FT Money, the section that I edit in the FT, obviously run their own businesses. And I'm being inundated with messages from readers who are concerned that the government support packages for businesses at this time are not recognising all of the entrepreneurs and small businesses in Britain. And so hopefully today's session, which I can get your questions interactively through my iPad, I'll be able to respond live to a lot of your concerns. And if it's a question that I don't know the answer to, I'd still like you to ask it, because that will really help to inform the FT's future coverage of this highly, highly important area. So I'll start off by saying, in summary, over the weekend, I have had literally hundreds of emails, both to my personal email address, claer.barrett@ft.com, and to the money inbox, money@ft.com, from readers who are absolutely in a quandary about what they are going to do with their businesses. Many people do not qualify for the self-employed package of measures which the government put out on Thursday, because they are the owner-directors of a limited company, whereas the government support package is aimed squarely at sole traders who have very simplistic tax returns. So I'm going to start off by talking about some of the questions that have come in on that and responding to those as we wait for more to come in. Now, if you want to put a question to me, if you're watching this article on ft.com, you can just put a question in the comment field below the line, and one of the FT's video team will magically make that appear on my iPad. Or if you're watching on the YouTube channel, you can put a comment below the line there, and the same thing will happen. If I don't get to all of your comments, I think we're going to do a fairly regular video of this, so we will get to them next time, and I will read them all later on, so don't be dismayed. So the biggest question is, why are limited companies left out of the self-employed help package? Now, there's been a huge amount of anger expressed to me from readers who say, I have got to have a limited company set up with my accountant, because if I didn't have that, I wouldn't be able to get work. Now, that is particularly the case for creative professionals who work within the UK film and TV industry. They've been telling me that all of the major media companies won't take them onto their central suppliers list unless they are a limited company. If they were trying to do it in their own right as a sole trader, that wouldn't be allowed, because big companies are concerned about tax rules governing off-payroll working, known as IR35, and fairness between agency staff and in-house staff. So lots of people wanting that message to get out, lots of people saying that they're writing to their MPs saying, you know, people who run limited companies aren't rich, and we need to be helped too. So we have lots of readers working in film and TV who are saying, I'm not going to get any help from the self-employed scheme because it is concentrated on sole traders. So what can I do? Now, one of the sources of help that you could consider if you are in that situation is whether you could furlough yourself under the other government scheme for jobs interruption. This is the one that applies to PAYE employees, because most people, when they set up a limited company, will receive a nominal sum, normally around £700 or £800 a month, through PAYE to themselves as a director, and then they will receive the bulk of their income, which obviously is variable, as a taxable dividend. Now, although you won't be able to claim under the self-employed scheme, it is possible, the Treasury say, for sole owner directors to apply to furlough themselves through the jobs protection scheme, and then they would receive 80% of the PAYE element of their income for 3 months. But the catch to that, as many readers have also noticed, is that if you furlough yourself on PAYE, then technically you're not supposed to be doing any work. Now, again, the Treasury have said owner-directors can still continue to perform their statutory and administrative obligations as company directors, and here's the but, so long as that is all they are doing. Now, you don't need me to point out how unfair that seems in contrast to the self-employed help scheme, where those who have a trading profit of up to £50,000 per year can claim income assistance, but at the same time, the self-employed are still allowed to try and get work. So that is a big difference between the two schemes. It doesn't quite even out. Now, I had a really great comment over the weekend from a WhatsApp group that I've joined for the directors of limited companies who, as you can imagine, are all banding together to try and lobby the government to better support their needs and to get it out in the media about why people who are running limited companies need to be understood. Now, Colin says this issue is essentially a question of fairness. The employed and the self-employed are being compensated for the loss or potential loss of income through forced redundancy or loss of work by the government, but those running limited companies are not. Why? Simply because our regular income is recorded as dividends and not PAYE. But our income is only recorded this way because of decisions made by the government. None of us have engineered a situation where we need financial assistance from the government, nor one where we are told by our accountants that we should be paid in this manner. I think, Colin, a lot of people will agree with you. He also makes the point that it's an issue, he feels, of perception. If you have a limited company, people might think that you're quite a wealthy person. Certainly there were some comments by the Chancellor about the self-employed who were left out of his scheme had an average income maybe as high as £200,000 per year, which again, many readers have been objecting to and taking issue with. And politically could be seen to be too much, to be bailing out people who have a lot of money. But the reality is that lots of people who are running small businesses are telling me that they don't have a lot of money. A big problem for lots of you has been negotiating with landlords about rent bills that are due, working out how the PAYE furlough system could work for your own staff, because businesses are going to have to fund that themselves from now until they can claim back the money from HMRC until May. And Colin adds that it's not that people with limited companies are asking to be treated differently from anyone else, they just want the same level of security. And he notes that the income support available through both schemes for the self-employed and for PAYE workers is capped at £2,500. So lots of limited company owners can't understand why they wouldn't be able to apply for support through that. Another anomaly that Chris, who has emailed in, has pointed out, says, why is it that people employed in a company do not have a cap on their incomes the same as the self-employed? Well, Chris, is a very valid point. The terms of the scheme that were released on Thursday by the Chancellor, I'm just going to waggle this so my computer doesn't go to sleep, said that the self-employed protection scheme can only be applied for if people have a trading profit averaged over the last 3 years of less than £50,000 per year. Now, if you were somebody who was being paid a salary and you wanted to be furloughed on the PAYE scheme, there's no cap on your income. The only cap on both schemes is to limit the payouts at £2,500 per month. So unsurprisingly, lots of FT readers, some who are only very marginally over that 50,000 cut-off for the self-employed. One lady got in touch with me on Saturday to say that she averages £55,000 trading profit over the last 3 years. She's a single mother with 3 children, doesn't know what she's going to do to survive financially from now on. We also have a comment here from Ardent Ramona, someone who I recognise from the FT comment field, who says, I can't understand why there is a disparity between PAYE and self-employed for this safety net. Why is there a limit on the earnings of self-employed people at all? They will feel the income stop immediately, and then what? Whereas an employee is protected by an employer and has no considerations over equipment they may have bought, etc., we have no such protection. Well, selling equipment, unfortunately, has been mentioned in a few emails that I've had from people who are desperately looking for ways to get their cash flow going so that they can survive for the coming weeks and months. And Another problem that people have been talking to me about is how they will keep businesses going when they don't have very high levels of cash. I've got an email here from Ian Street, who says he's self-employed, a sole trader working as a landscape gardener. He's been building up his business for 25 years. He's built up savings going into his retirement, and he's dismayed that the government has got nothing to offer to the self-employed other than statutory payments. I have a mortgage, he says, a loan, VAT and tax bills, and all other living cost expenses the same as everyone else. However, I'm now being treated differently to most other working people. Now, I'm going to read out some links at the end of this video to the government help websites, and also a new HMRC tax helpline number that's been set up, because of course one of the main avenues open to businesses who are looking to manage their cash flow is deferring tax payments, which is something that the government has offered with both time to pay on tax bills and deferring the next lot of VAT receipts, as well as information on the grants, which I can see on here. People are asking for the email address for the government portal, which I will, which I have got on here, and I will briefly read out. It's www.businesssupport.gov.uk, and that is in the link, the main link for this YouTube video on the FT's YouTube channel. And I'll just read out the HMRC coronavirus tax helpline for those who wish to defer tax bills. This is a new number that they've brought out in the last few days, which will have much more chance of being answered because they've been putting lots more people onto the helplines. The HMRC tax number is 0800 024 1222. I'll read that out again, 0800 024 1222. And again, that website and that number can be found in the FT video description. So I'm just going to look through the latest comments that we've got. We have been sent in a question from Emma, who is newly self-employed. Unfortunately, Emma, you are in another one of the groups that's fallen between the cracks of this self-employment scheme. Emma says, I'm just about to submit my first tax return, so that's for the 2019-20 tax year, as I've just started out as a freelance hairdresser. The irony is, Emma, is that people like me have never been in more need of your services, but obviously because of social distancing, I'm having to put up with my roots. But Emma says, I've applied for universal credit. Is there anything else I'm entitled to, as I've still got bills to pay and there's no other way of income? Well, unfortunately, this is a situation that many new freelancers who have been contacting us over the weekend find that they are in, even though they have a full year of tax receipts from the tax year that's just about to end. This won't be counted by Rishi Sunak's self-employment help scheme. The tax year that you must have a return in for, although if you haven't done it, you can do one in the next few weeks, is 2018 to 19. That's the crucial year. They will also look at payments from the 2 tax years before that to work out your average trading profit over that 3-year period. If you are a sole trader with trading profits of less than £50,000 a year on average, you will qualify for the self-employed scheme, which will be worked out as an average of 80% of your profits for 3 months, made in one payment, which will be backdated until June. Now, it's not open to apply yet, that scheme. HMRC will be contacting people who are eligible in the coming days, but bear in mind that the money won't be received until early June at the earliest, which again is something that is very much worrying readers. So how can Emma and others look at other sources of income? Well, lots of the banks and the credit card companies and the mortgage lenders are all saying that they will offer periods of forbearance to people like you, Emma, who are affected by the coronavirus. And of course, most people who don't have savings over £16,000 will be able to claim something on universal credit, although it isn't very much. And unfortunately, the wait times to claim that and register for it are very high, and unless you apply for emergency payment, you won't get anything from universal credit for 5 weeks. But I hope that me giving you this information is nevertheless useful. I have another question here coming in from Boris Nomics, who asks, if employees are put on a 0 hours contract, what help can they get? Well, Boris, that's a really good question. the truth of it is that if you're on a 0 hours contract, your employer is allowed to furlough you under the government's jobs protection scheme for PAYE employees. But what they will do is take your average earnings for the month of February as the figure that they will furlough 80% of your pay. But there is a catch here, because your employer has to be the one who applies to use that rather than you. And I am getting reports from many readers that not every single employer wants to furlough the staff, and certainly they can't be forced to, which is one of the weaknesses within this system. There are clearly concerns for small businesses that they will have to meet the costs of paying those 80% of salaries for the next few months until they claim the money back from HMRC. That could be one of the things that's putting them off. Right, I'll go on to the next question. Aubergine, great name. Aubergine says, I don't understand why this is being framed as a creative industries phenomena. Surely there are not lots more owner-directors outside this industry who are facing the same issue. For example, the tech industry, buildings maintenance, consulting, fitness, retail, etc., etc. Aubergine, you're entirely right. It's not just the creative industries. The problem for the creative industries is particularly acute because so many of them have been forced into working in this way through using limited companies, which is why the FT wrote the story this morning, particularly looking at how people working in film and TV are very fearful for their future. But anybody who operates through a limited company is, of course, feeling the same effects. We covered this more generally in FT Money at the weekend. We also heard from lots of people who run limited companies because of the protection that being a limited trader involves. For example, if you're a builder or an electrician or a plumber, you must have a limited company rather than be a sole trader in case there's any possibility of a negligence claim in future. I had one email from a plumber over the weekend. I don't have it on my iPad, unfortunately, saying, I am there for people in times of emergency. Why is the state not there for me when I'm having an emergency over my income? Very, very valid point. Obviously, we will continue to report on all of these issues in the coming weeks. I have another comment here from Grierson53, FT.com reader, who says, my wife co-owns a small speech therapy practice, mostly treating young children in person or in schools. Her work has completely dried up. I'm very sorry to hear that. Her 9 employees have been furloughed. The 2 owners of the business pay themselves a small PAYE salary, £7,000 per year, and use dividends as advised by a reputable accountant. This scheme has been in place for 4 years and they each make around $35,000 in income a year. As noted in your article, the owners of businesses can get no personal help from the government at this stage. He says they cannot furlough as they have to fulfil directors' responsibilities. Well, the advice from the Treasury is you can furlough and fulfil your administrative and statutory obligations as a director, but you can't do anything else. And then he says she cannot claim for lost income as she's been paid via dividends. Well, this is the sticking point. You won't be able to claim for any money that you've had through dividends if you're the owner director of a limited company, but it is possible through the furloughing scheme to apply to get 80% of the PAYE salary that you've had. Now, of course, the way that the accounting practices work is that most people are only paying themselves about £700 or £800 a month through PAYE. And of course, 80% of that for 3 months is not going to be very much money. So it's completely understandable why so many readers are absolutely terrified about the future prospects for their businesses. So we're also getting lots of suggestions via ft.com of what else the government could be doing, what other systems it could be considering. And a lot of people are saying that rather than starting these nobly intentioned but very complicated schemes from scratch, should the government be looking at a simpler solution, i.e. universal income? So instead of trying to manage the benefits system, the self-employed scheme, the PAYE scheme, could universal income be an easier and quicker way of getting people the money they need? So ft.com reader protest says, typical UK bureaucracy, red tape and costs, creating winners and losers. America is simply giving everyone $1,200 US checks if they've been registered with the tax authorities since 2018. It will be a lot cheaper if every British adult gets £1,000 per month, a bit like universal income. This UK method is risking anarchy when the losers to this giveaway have empty bellies. Even entrepreneurs who are making annual losses get zero. Are they not hardworking enough? Well, thank you very much for your points, Protest. Have another comment coming in from David Rose, who is commenting on YouTube. He says, I've been self-employed since 1996 and I have submitted my accounts up to 2019. In May 2019, I went down the limited company route with my wife. We get taxed at source. We do not pay ourselves through PAYE. Are we not entitled to any scheme? Well, David, I think the question for you and your accountant will relate to your 2018-19 tax return. Now, you say that that was at the point where you went into a limited company structure. So if you're still working as a self-employed person, which is one of the conditions of HMRC's scheme, it's possible that they will look at your previous accounts and work out the average of those. But obviously for people who have changed denomination, it's very difficult. I spoke to somebody else yesterday who was saying to me that they had a limited company, but they still had some income coming through their previous arrangement. This is a really, really difficult area because obviously you have a partial tax year there of self-employment, and that is for the crucial year that they're looking for. So I would have to say that you would have to get professional advice on that, I'm afraid. Another question coming in from YouTube, Tom Barnes asked, why can't HMRC tell the difference between a small business company director taking dividends as income and somebody else receiving dividends as a shareholder of a large corporation such as BP? Now, this is a really interesting point, Tom, and thank you for raising it. So one of the reasons that's being given by experts for why it's too difficult for a self-employed scheme to look at income from dividends and look at replacing some of the directors' income that they've lost through the disruption from the virus is because on a standard UK tax return, you just have one slot that says income, dividend income from UK companies. And that obviously could include the dividend income that you've got from shares while that lasts, although we all know that shares from dividend income from shares across the board are under threat. Nearly £4 million worth of dividends cut or cancelled last week alone. With the dividends that you get from your own company, it's all just one figure. It's mixed together. Now, one solution that's been touted by other directors is looking at the self-assessment forms which people submit. If they want to apply for a mortgage, for example, they have to fill in a special form breaking down the sources of their dividend income so that the mortgage lender can make a decision about where their money is coming from and what kind of credit risk they're going to be in the future. So some people are saying, could we not use these forms? I believe they're called SA 302. Could we not use those forms to apply from this? And that's maybe an idea that hopefully those in charge could consider. Now, also, lots of anger out there from readers. I'm just going to waggle the mouse again so my laptop doesn't go to sleep. Lots of anger out there from readers about the Chancellor's comments on the tax treatment of self-employed people. We've got a comment here from Molly Cockcroft, who says, regarding the statement that taxes will increase after this has passed to level the field for self-employed people. If we as directors do not receive help now, how is it fair that we will be expected to contribute more in the future? Well, a really good point, Molly, and certainly one that's been made to me over the weekend by different readers in different ways. So a lot of people are telling me that they don't have any particular desire to be registered as a limited company, but because of the nature of the work that they're doing as a freelancer, they either have to be in a limited company, like we were talking about, professional tradespeople, like builders, plumbers, who must limit their liabilities, or they're being told by the bigger clients that they work for that they have to be a limited company before they can engage. I've even had somebody send me on WhatsApp a picture of a government procurement organisation saying that if you want to work for that particular arm of government, you have to be a limited company. And a lot of this is going back to issues that have been kind of bubbling under in the tax system for more than 10 years. We've got this tension over off payroll working, IR35. Lots of people obviously have set up limited companies over the years because the pressure has been on big companies to stick within the IR35 rules. And unfortunately, the delay that we've been reporting on separately in the FT won't really have done anything to change that. So these are kind of big structural questions about the British tax system, which unfortunately, through the nature of how this scheme has been currently put together, are really being put into the spotlight today. Now, how the tax burden could shift at the point in the future where people are expected to pay things back, well, I think I'd like to use my time on there to point out how angry a lot of small business people are that they seem to be in some way cheating the UK tax system because of their setup. They point out that, as a limited company, they will pay taxes, they will pay dividend taxes on the dividend income that they're taking from those companies. And then in a lot of cases, they're also employing other people, other staff. They're paying tax and employers' national insurance for them. But the real sticking point seems to be national insurance, because obviously if you're paid as a director through a limited company and you're performing services for a bigger company, then that big company isn't paying employers' national insurance contributions as it would be if you were on their payroll. But then I would stress, let's think of the people aspect to this story. If you are a freelancer, and goodness knows I've been contacted by so many people who are in various desperate situations. If you're freelancing, you're not entitled to sick pay. You're not entitled to holiday pay. You're not entitled to any kind of pension contribution from the employers that you work for. And one survey I've seen says that around 70% of self-employed people aren't making any savings whatsoever into the pension. So I think that the perception that the self-employed are somehow using this limited company tax structure to achieve some great advantage, either financially or through the tax system, is a real misnomer, because a lot of self-employed people have denied the benefits that people who are on a PAYE system are, uniformly receiving. And that is a very big difference. I have another question here coming in from Edward Bishop, who asks, Claire, what is your view on using the business interruption loan scheme as a means to keep your company going, to use for the day-to-day running of the company? Well, this is an issue, Edward, that various of my colleagues at the FT, including Dan Thomas, have been writing about recently. The business interruption loan scheme, this is administered by the British Business Bank, but they're pumping out the money to the banks that you would normally approach for loans during your normal course of business. So if you want to apply for a business interruption loan, then approach the bank that you're with your business account at the moment. They would be the first people to go to. Now, there has been a bit of a slow start to the scheme. Lots of criticism that bank staff who are all working from home, like I am today, are slightly out of the loop about the details. Now, those issues seem to be overcome, but the next issue has turned to personal guarantees. Now, the FT was reporting an awful lot last week about this, that people who have got their own business who are applying for the business interruption loan, although they won't have interest to pay for the first year, they were being asked to sign personal guarantees on their assets, or not their actual houses that they live in, but their income. They were asked to be pledged security, and lots of people were obviously, understandably, very unhappy about that. Thought it was too much of a risk. So there has been some capitulation from the banks. Some of them are no longer asking for personal guarantees. Certainly for the loans below £250,000, it's apparently becoming less of a standard requirement. But as ever, you are our eyes and ears out there, FT readers. If you want to tell us more about the loan scheme, or how you feel you're still being asked for a guarantee when you shouldn't have to provide one, then get in touch with us, you can email the Money Desk. We're money@ft.com, or follow any of the journalists who are writing these stories on Twitter. I would suggest Dan Thomas as being a really great one to follow. I am at Claer B, Claerb on Twitter, and I'll tweet out links to lots of my colleagues and other articles that we've written about this very soon. Now, on the subject of the business interruption loans, speaking as somebody, I was chatting to my best friend over the weekend because she doesn't know whether to apply for a business interruption loan for her business or not. The big problem is, when will people have to pay the money back if they've got zero income coming in? Lots of readers have been emailing the Money Desk over the weekend and saying, I've applied for one of these business interruption loans. My bank knew what it was, so that's good. Thanks for getting the message. But my bank then asked me to fill out a business plan projecting what my income would be for the next 12 months and how the business would be going. And one reader points out, I haven't got a crystal ball. Well, none of us have. It does seem very incongruous to have to make a business plan in order to get this loan when none of us really know for sure when we're next going to have income coming in from businesses which have been put on ice or furloughed. We have been speaking to some very entrepreneurial business leaders in FT Money who have been able to keep their businesses going through the crisis by turning around what they do, switching to a postal delivery method, or changing a restaurant business into a takeaway. But obviously there's a limit to how many businesses can do that, and there's also a limit to how many people can do their jobs from home. I'm very lucky that I am set up to do this from home, although it does feel slightly strange to be sitting in my living room talking to you all over the screen. I've got another question that's come in from David Payne on YouTube. He asks, as a small business owner with several furloughed employees, do I need to pay all employees up front before later claiming the 80% back later? The gap between payment and reimbursement concerns me. Well, thank you, David, for raising that question. I think that's probably going to be one of the last that we'll take today, unless we suddenly get any more through. So yes, as a small business owner, you will need to pay your staff the 80% of their salaries, obviously coming up to the end of the month now, so a crucial time for small businesses. The HMRC scheme to reclaim via a grant, which you won't have to pay back, but that scheme to reclaim it is not open yet, but it will be, and the payments that it makes are expected to be made in May. So they are expecting businesses through a combination of tax deferral, help with business rates, maybe even business interruption loans to fund the cost of paying the furloughed staff 80% of their salary, and they will then get it back in May or thereafter. So again, there is a lag built into this system. Now, I'm going to read out that website again, which is the main source of support for any business or individual looking to see what help they can get for their business from the government, which has got the full nitty-gritty of all of the rules of these schemes. That website again is www.businesssupport.gov.uk. I'll say that again, businesssupport.gov.uk. Now that is a portal that will let you access all of the different government help schemes, advice about business interruption loans, advice about business rates, all of the things that we've talked about with you on the video today. I'm also going to mention again the HMRC coronavirus tax helpline. This is the number that you need to ring if you want to defer tax bills. It is 0800 024 1222. I'll say that again, 0800 024 1222. And all of those links can be found in the video description. So 2 things to mention before I go. Firstly, on Wednesday this week at 4 p.m, the FT's economic titans Chris Giles and Martin Wolf are going to be engaging in a live webinar, which you can watch. For more details, follow the hashtag FT Digital Dialogues. That's hashtag FT Digital Dialogues. That will be on the FT website somewhere Wednesday at 4 o'clock. And then on Thursday, my colleague Dan Thomas, the FT's executive news editor, who's been writing many stories about how businesses are coping in the crisis, He is going to be in the hot seat taking questions live from readers all about the government rescue schemes. As we have been reporting on these schemes, more news is happening every day, more tweets are being made, more loopholes are being found, and more information is being given. So on Thursday, if you want to ask questions of Dan Thomas, he will be up in the hot seat, and you can follow me on Twitter for more details of all of these things. I'll tweet out lots of links when we've come off the live broadcast today. My handle on Twitter is @ClaerB, that's spelled CLAERB. Well, thank you very much for joining me today on the inaugural Claer Barrett's Business Clinic. It's been really great to hear from you and to hear all of your concerns, which will better inform the FT's reporting in the days and weeks going forward, as we help to inform you about everything that you need to know about in the teeth of this crisis. I'm Claer Barrett, Personal Finance Editor for the FT. I hope to be back with you very soon. Thanks very much.